Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment of Traders review. Today we're going to have a look at the 35th CO2 report of 2018, and as usual we're going to start off with the changes in commercials positions. Before I go into the review, a reminder, we've got futurestradingguides.com out focusing on futures markets, and another service, FX Trading Guides, which of course is focusing on forex markets, but also we have added cryptocurrencies too. So back to the review, and starting off with the rough rice, where we have a 21% change in commercials positions, 27 in large speculators. You can see these changes are definitely much greater than average, although we do see similar changes in the past. This is of course a bullish COT change signal, possibly coming a little bit late for us, since as you see during the week there has been a bit of a rise in the market. So who knows if this will continue early next week. The COT change signal is suggesting it may actually continue. Jumping to the 5-year chart, you can see how extreme this market is. We are getting closer to bullish extremes. Of course, there's still plenty of space left to reach those really high, close to all-time extremes that you can see here on the chart from 2015. Nevertheless, this is an extreme that is building up, as I said, towards the bullish side of the market. Moving on to soybean meal, which is our next market, with a 20% change in commercials positions. You can see that change size over there. Here we are talking about a much greater change than average. Comparing to the rough rice market, you can see that pretty clearly on the charts here. Again, we are talking about a bullish change signal that may push prices higher from here. You can see pretty much soybean meal bottomed over here at this level. The change signal definitely suggests that this bottom has been reached, at least for the early part of next week. Jumping to the extreme analysis on this 5-year chart, you can see that we've moved away from this bearish extreme, which was, by the way, a very successful signal, as you can see on the chart, and we're moving away from that bearish extreme. Of course, is this a bullish extreme, a relative bullish extreme? Yet that's a question, because of course we are not at those very large extreme levels that can be considered trend changers. Of course, as you may see on the chart over here, early 2016 was a great example, but we'll see what happens to the market. The next market is the gasoline market, with an 18% change in commercial positions. In this case, we are talking about a bearish COT change signal that could push prices down early next week, and of course we are happy to see rising prices in front of this COT change signal. The strength of it, of course, is questionable, but it's definitely the third market that we're analyzing right now. So compared to other markets, there's definitely something to be seen over here. Jumping to a 5-year chart, you can see the extreme, which is getting bearish and bearish, basically from mid-2017, when we had this bullish extreme in the market. Traders are, of course, moving to their bearish side as prices are getting higher and higher. So so that's gasoline. Let's move on and have a look at large speculators COT extreme. But as you may see, we have 69, 68 reported extremes. I'll open Euro, but we might as well just jump over to another analysis. I'll show you right away. So let's open Euro just to have a look at it, what this 69 report extreme means. You may see that it is definitely a relative bullish extreme. Large speculators are underneath the zero line, so there's definitely something to look at over there. We had this pretty decent bearish extreme in the market back early this year, which, as you may see, was an effective signal. Since then, the price of Euro compared to the dollar has decreased. The question, of course, would this trend continue? Well, we're definitely not at those all-time bullish extremes, as you may see from early 2015. And of course, there's another example the end of 2015, and then from the end of 2016, we had some nice bullish extremes. But in relative terms, the 69 report extreme can be considered something to take into consideration. Let's jump over to commercials, COT Extreme. We have the silver on top with a all-time extreme. So that is pretty interesting. Basically, we can see that commercials are, if we jump back to the 1 year chart, it's going to be visible over there. You can see commercials just gone net long, which I believe has never happened in silver's history. If we open a let's say a 15 years chart, yeah, that kind of speaks for itself. So huge extreme in the silver market. Of course, bullish extreme, suggesting a major change in the trend over here. Of course, the question is when that will happen. The dollar index is our next market with a 66 report extreme, so pretty similar to the euro. Of course, we're not surprised to see that. This is, of course, a relative bearish extreme, but definitely there's plenty of space for that to increase to even greater levels. Now, soybean meal, we talked about that, so might as well just jump over to, okay, small speculators. Again, soybean meal is on top of the list. So might as well just jump over and have a look at orange juice and see whether or not we have something interesting over there. COT change wise, nothing really. Under average change in traders positions. Jumping to a 5 year chart, you can see that we're more or less in between the two major extremes, but this 19 report extreme, we're talking about small speculators, could be considered a bullish bullish COT extreme signal, suggesting there may be a turn backwards to the positive side. We may see an increase in price of orange juice. So that was all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.